Hey guys, welcome to the channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. Guys, if you like what I'm doing, consider subscribing. Give me a thumbs up. It really helps out the channel, spreads my videos, spreads my channels to more and more people. I give my opinion on a lot of stocks and a lot of things that I'm personally doing. So I'm just sharing my opinion with you guys. If you find value in my opinion, please consider giving me a thumbs up and consider subscribing. All right, guys. So last week, about 4 or 5 days ago, I dropped this video. Has over 2,000 views right now. It was right when the news came out when Lordstown Motors announced their merger with Diamond Peak DPHC. And so I'm going to go into more detail about this merger since now they have their investor presentation out. And so we're going to go over the investor presentation. I'm going to break down all the relevant points that I see. I'm going to give my opinion on it. And so everything I do say is just purely my opinion. I'm just sharing my opinion with you. This is not investment advice. I expect everybody to look at my video, look at my opinions, and then form your own opinion by your own research. All right, so guys, let's get into it. Diamond Peak and Lordstown Motors merger. All right, to start it off, so the list of Lordstown team leaders, Steve Burns, he's the founder and CEO of Workhorse. So Lordstown is actually a somewhat of a spin-off from Workhorse. Everybody knows Workhorse is in the news for this contract that they're bidding for from the United States Postal Service. A lot of people on this team is originally from Workhorse. Julio Rodriguez is CFO. He is from Workhorse. And they have people that they brought in from Tesla. Rich Schmidt, he is the chief production officer. He is from Tesla. And John Vo is from Tesla. And Darren Post is from GM. And his last project was working on the Karma, the Fisker Karma electric vehicle. So the transaction highlights. So basically, Diamond Peak has $280 million of cash. There's going to be a further PIPE funding. It's going to be $500 million. Of that $500 million, $75 million is going to come from General Motors. So they will have a valuation of roughly $965 million, and that's going to be on their balance sheet. They're going to have zero debt after this merger is complete. So they will have roughly $675 million to fund their growth, and they do not expect any more money between now and going to market. And they will be cash flow positive. All right, so one thing I do like about their approach is they are targeting a whole different market than pretty much everyone else is targeting with their trucks. They are targeting the fleet market. So these are utility companies, construction companies. These are companies that buy either tens or hundreds of vehicles at one time. So this is not targeted for the consumer. The Cybertruck is more consumer based. The Rivian truck is more consumer based. Badger truck. So every single other truck out there is more consumer based. The only other truck that is targeting the fleet market will not come out until 2022, and that is the Ford F-150. So they also have a fleet side of their business. But so right now, as far as 2021, where their Lordstown Motors truck is going to come out, they are the only player that's really targeting the fleet market. All right, so things I'm going to point out about this slide. So number one, they're using this proprietary hub motor technology, and really they're the only ones to really be using this hub technology. So basically, it's a four-wheel drive vehicle. All four motors are inside the actual wheel. And so that is traditionally different from a lot of other manufacturers. A lot of other manufacturers basically have the electric motor on the chassis itself. So this is different where they have the motor inside the wheel. And what they're doing is they're basically partnering with a lot of people so they could bring this product to the market as soon as possible. They're targeting 2021. So they're probably going to be first to market. So here are their strategic partnerships. Basically, they're going to partner with Workhorse. That's where the CFO, CEO, the management team comes from. Samsung is going to provide the battery, and Elfi, they are the ones that are providing the electric motors. They have the technology for the in-hub motors, and GM, they're providing all the parts that do not face the customer, like all the wiring, all the harnesses, airbags. So all those things will be provided from GM. So their Lordstown complex, it is able to produce 600,000 vehicles. This is a complex that has been producing vehicles for a number of years. I believe the last vehicle they were producing out of this plant was a Chevy Cruze. So this is a tried and true complex that has traditionally been able to pump out vehicles. So the estimated annual capacity is about 600,000. All right, so this leads into my theory. If you watch my other Workhorse videos, this factory, this Lordstown factory, like I said, is able to pump out at least 600,000 vehicles. So they're not going to pump out 600,000 of these trucks. So they have this massive factory. What are they going to produce in this factory other than these trucks? It's a massive complex. What else are they going to do? My opinion, my theory is that they are going to combine with Workhorse. Workhorse is going to outsource their contract for the United States Postal Service. The United States Postal Service is going to need 100,000 plus. I think it's like 160 or 180,000, somewhere in that ballpark, of new mail trucks. And so this is the key. Workhorse is not capable of producing these trucks. They just don't have the manpower. They don't have the facility. They're only expected to make 300 to 400 trucks this year. So they are not capable of pumping out 100,000, nearly 200,000 trucks for this USPS contract. So this is my theory, is that they're going to partner with Workhorse. They're going to partner with Lordstown, since Workhorse does own 10% of Lordstown, and the management team is from Workhorse. So there's a tight connection there. They're going to outsource this USPS contract and have them built in Ohio, in Lordstown, because that is where Donald Trump needs votes. That is where he is going to promise the people of Ohio that he has brought a lot of jobs to Ohio. No Republican has ever won the presidency without winning Ohio. So that is my theory about this whole complex, this whole big picture of Workhorse, the Lordstown plant pumping out up to 600,000 vehicles. A big portion of that is going to be the United States Postal Service vans and trucks. All right, so some key points on this slide. So the pickup truck is the #1 selling vehicle in the United States, period. So 60% of vehicles sold are estimated to be fully electric by 2040 versus only 2% are electric today. So that is a massive amount of market share that they are targeting. Also, as I said before, they're targeting the fleet market. So they're not targeting the consumer market as of yet. They're going for those big contracts, utility trucks, so trucks that are bought by the hundreds, if not by the thousands at a time. So number 3, they're going with this hub motor technology. It is a very simple design with a less moving parts, so they're able to get to market a lot faster using this hub motor technology. Number 4, they have strategic partnerships with GM, $75 million coming from the pipe being funded by GM. Also, they are a candidate to get this government loan, the ATVM loan from the government. I believe it's going to be roughly $200 some million. So number 5, I highlighted there. They said demand proven with pre-orders covering first year of production. So they have enough pre-orders to cover the whole first year of their production. But I don't take much into that because these pre-orders, I think it was only like $100 down for each vehicle. So and I think it's refundable. So if anybody wants to cancel, they could cancel right away. So I don't read much into that. All right, so going electric is going to save a lot on fuel. So this is going to be really important. Their maintenance costs and fuel costs when you're talking about a complete fleet, a company that has hundreds of these trucks, they really look to cut down fuel and cut down maintenance. And so this is the market that they're targeting, and that is very wise in my opinion. So it's going to be roughly 75 miles per gallon equivalent, and roughly maintenance cost per year is $360. Comparing that to a traditional ICE vehicle with roughly 15 miles per gallon, and over $1,000 in maintenance costs. So what they do here is they break down a 5-year cost comparison between the Ford F-150 and their Endurance. So a 5-year difference is going to be roughly $19,000. So in there is you take $7,500 off for the federal tax credit. And the fuel cost is only roughly $5,200, and maintenance cost is roughly $1,800. So that's where you save roughly $20,000 per vehicle when you take a 5-year cost comparison analysis. All right, so this hub motor technology, not a lot of people have been talking about this hub motor technology because I think it's relatively new. Not a lot of vehicles, actually not one that's on the market right now, uses hub motor technology. Pretty much every single electric vehicle has their electric motor on the chassis itself. That's what Tesla is doing with their Cybertruck. That's what the F-150 is doing. Rivian does have 4 independent motors for each wheel, but those motors are not in the wheel. So really the only company doing this is Lordstown. They are the only one taking this technology and actually implementing it. So it will be interesting to see how successful this technology is. It is not tried and true. The tried and true method is to have the motor on the chassis itself, but we will see if this is a better solution, a cheaper solution for them to manufacture, and if it will withstand, the ruggedness of being a work truck. So one thing I will say is that a lot of companies don't do this because that gives you too much unsprung weight. So what is unsprung weight? I did a lot of looking into this, a lot of research. So I'm going to share my information with you guys. Basically, if you have the motor in the wheel, in the hub, you have a lot of weight that is below the suspension. So basically when it's under the suspension is not going to be able to balance that weight. So when you hit a rock, when you hit something, the vehicle's suspension will not be able to push that wheel back down onto the road because the hub motor is unsprung. It is below the level of the suspension. So a lot of manufacturers don't do this because you want to reduce unsprung weight as much as possible. You want most of your weight to be above the suspension, and that's traditionally how vehicles are made. But Lordstown has figured a way around this, and so here, take a look. So they have all these hub motors, each hub motor in each wheel, but they have designed a special suspension for each individual hub motor. So they have suspension for the entire vehicle. In addition, they have suspension for each individual hub motor. And so that is definitely a revolutionary new design that a lot of other manufacturers are not doing. I'm not saying it's better. I'm not saying it's worse. I'm saying this is new, and we will see if this is a good method of manufacturing vehicles, manufacturing trucks, and how this unsprung weight is going to be balanced with these special suspensions for each hub motor. Elfi Propulsions, they are the company that are providing their technology for these hub motors, and so you'll see they have relationships with other OEMs, Audi, BMW, and Land Rover. But you'll see the Audi, it's an R8 prototype that's using these hub motors, and the BMW X6 concept car that's using these hub motors. So like I said previously, this is not really a tried and true technology that is implemented for mass production. All right, so here is the competition. Lordstown, they're scheduled to launch in 2021. Rivian is also scheduled to launch in 2021. But I'll give you some information. Tesla has a lawsuit against Rivian. Basically, the whole story is there were Tesla workers that moved over to Rivian, and they basically downloaded stuff on their email, and then they emailed it through the Tesla server, through their work email to their own Gmail. So this is all well documented. This information was taken from Tesla, and these people went over to Rivian with their technology, with their proprietary technology. So Tesla is suing them. So this really could delay Rivian's truck. So Rivian truck may come out in 2021. It may be delayed to 2022, if not longer, depending on what's going to happen with this lawsuit. The only other company that's scheduled to have a truck out in 2021 is Tesla. They are building their Gigafactory in Austin. They already are clearing the land. And so what we know about Tesla is they are building factories faster and faster. I will not count Tesla out, even though they don't have a factory yet to build this truck. They build factories very, very fast. Lordstown does have a factory, but they're in the process of retooling. And so they are also scheduled to be releasing in summer of 2021. One thing I want to point out here is this is information provided by Lordstown. So they're always going to give numbers that make them look better. You'll notice the Cybertruck there, they have the price of the Cybertruck at $69,900. But that is the highest end of their Cybertruck. And so if you want to compare the same price, you would probably compare it to the $49,000 truck. So they just put the highest end for the Tesla truck just to make their numbers look better. So always keep that in mind when you are looking at investor presentations. All right, so I think those are really the biggest points of this whole presentation. The only one other point I want to talk about is basically their financial situation for this transition, for this merger. So the pro forma valuation, basically what the combined company is going to be worth. The enterprise value is roughly $996 million. That is taking a $10 per share price. And so right now, Lordstown is trading at just in the $12 range. So there's a little bit of a premium on this, but it is still in that nice entry point. In the $10 to $12, maybe up to $13 is pretty understandable for getting in early. So this is a SPAC, and so SPACs really just trade in the $10 range. So if something happens, if the merger falls apart, something happens, it doesn't go through, your money is pretty much safe, because you will get your money back at up to $10. So for instance, if you only had $12 in, you bought one share at $12, and everything falls apart, the whole deal is off, something happens, $10 you'll get back. It will be refunded to you because this money is in a trust. It is not available to the company until after the merger. So there's a level of safety when you invest in these SPACs if you get in, at the bottom. So that's why I like SPACs. And so right now, Lordstown Diamond Peak is trading at the $12 range. So it's still relatively early. All right, guys. So I think those are all the big points, the relevant points in this investor presentation. So I do think that they're onto something. They're targeting a complete different market, a fleet market that other people are not targeting. So that's a win for them. They already have a factory, and that factory is capable of producing trucks, vehicles up to 600,000. They have the relationship with GM. They have the relationship with Workhorse. I do think this one has a lot of potential. So that's my opinion, guys. If you like what I'm doing, consider subscribing. Give me a thumbs up. Really helps out the channel. Catch you in the next one. Peace.